Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 29th, right after the markets close. Well, before we start, please know that all of us at ToniTurner.com wish you a happy, healthy, and prosperous new year. Well, U.S. stocks were subdued today on the final trading day of an upbeat year. The benchmark S&P 500 has been hovering around its all-time highs on growing expectations the Federal Reserve will cut interest rates early next year. The S&P 500 is very close to its all-time closing high reached in January of 2022. If and when it closes above that level, it will confirm the index is entering a bull market after it hit the bear market closing trough in October of 2022. So now let's go on to three charts that could give us some insight, we hope, into the week to come. Okay, we're going to do something different this year. I told you a story a long time ago that when I was a very new trader many years ago, I was in a room taking a class on trading, and the instructor was a gentleman, kind of an elderly gentleman, very, very smart, very good trader. And at one time during the program, he stood up and he started kind of yelling at us, back up and look at the big picture. And that's always been wise. I've caught some things looking at longer term charts that I might not have caught had I not done it. So today we're going to look at a weekly chart of the S&P 500 spider. And I think that it might be beneficial for us to do that before we head into next week and what's going to go on then. Now, the SPY today closed at $475.39. You can see right here on the hard right edge of the chart. 475.39, just a whisker away from the 475. And if we look back here at the all-time high in January of 2022, it was $479.98. So we're cutting it really close here. We're just like 3 or 4 points away from that high, from closing at that high. So from this level back here in January of 2022, the SPY fell down to a February low down here to $411. See, it fell through the 20-week moving average, the red line, the 50-week moving average, the green line. Of course, there's 52 weeks in a year, so this green line is important. And so it fell to that February low of 411, then rallied again, tried to move higher but couldn't, and fell down to the June low down here at 362. Then rallied up here, tried to get over the 50-week moving average, but couldn't. And then at 432, that's where it stopped right here, just below that 50-week moving average. Then fell down to the 200-week moving average down here, and that low at 348.11. But then it hit this low, and right on the 200-week moving average, it started climbing back up here and kind of moving around and saying, well, I can do this, and moving back up over the 20-day moving average, then back down, but made a higher low here, very important, staying above the 200-week moving average. And then from this March low at 381, we see the 20-week moving average cross over the 50-week. That's always a bullish sign when you see the lower moving average, the one with a shorter time frame, moving over the longer time frame. So it moved up over that. That's very good. And then price started climbing in a pretty orderly uptrend here, up to the July highs that we all know about and talk about. And up to 459 was this July high. Then, of course, with the interest rates doing what they're doing, getting higher here, the SPY fell down to its October low down here, we all know, at 409, below the 50-week moving average. And but then as interest rates started moving lower, buyers came in, short the shorts started covering, and we've had this incredible rally from that October low all the way up to where we are now at the end of the year at 475.39. And you can look at this and you say, well, Toni, this is all very well and good, but what am I even seeing here? We can see a little bit, if you want to fool around with it, we can see a bit of an inverse head and shoulders here, which is a bottom reversal pattern. We can draw a line over the tops of these, which actually the 50-week moving average did for us. So you can see when it came back and retested here, it was a tiny bit higher low. Back there we talked about the March lows. And then the the SPY started walking up its 20-week moving average. So this area in here was very important if you saw it on this longer term chart. Turned out to be key. So, and this 409 low here, this is a key price support level for us. So the bulls have enjoyed since October, the bulls have enjoyed a very steep and enthusiastic uptrend, valiantly reaching for that January 22nd high at 479, January 2022, I should say, high at 479.98. I think we made it today, but we didn't close there. But we're not going to fuss about $4 or 4 points. If we do look down here at the 14-week RSI, we can see that it is on the weekly chart, it is touching the overbought line. Of course, on the daily chart, it's been doing that for some time. Now the biggest test, this is really simple. For the market, can the SPY push above 480, we're going to call it, because that last high was for all the world, 480, we're going to call it. Can the SPY push above 480 and keep going? Or, which I might, and I have thought in the last couple of weeks it could happen, does it have to pull into a rest stop, as I said, or pause for a week or so? And if it does that, the big question is, can it make a higher low? Can it make a higher low? That's what an uptrend is, higher highs and higher lows. And the lows are very important. Can it stay above 409, which is our point down here? We don't want it to go below. That's a low. And then can it make a higher low? And can it, better yet, can it stay above this support level right here at 460? And we can, if I could draw a straight line on a chart, we could see that this pretty close to this last, what was resistance becomes resort zone here, support zone here and here. So 460 would be nice. But if it can't do that, we definitely want it above 409. So I have tightened my protective stops. I've taken a little bit of profits on short-term trades here, and going to have a little cash as we start moving into the first week of the new year. We've had quite a Santa rally. We have to be grateful for that. Okay, our next chart today, we're back to daily charts. This is the daily chart of the QQQ. As you know, this represents the NASDAQ 100, which is made up of the top non-financial companies in the NASDAQ 100, including companies like Apple, Meta, NVIDIA, Microsoft, Tesla, that whole group today. When the Qs closed today at $409.54, very close to their all-time highs, just a little bit above the all-time high, which was in November of 2021 at 408,000, we wish, at $408.71. So November 2021 highs, all-time highs, 408.71. In fact, in Thursday of this week, we hit an intraday high at 412.92, about 5 points above that November 2021 high. But we're in a good place here. So now we see, can this momentum continue, or do the Qs need to slow down and take a breath, possibly like the SPY does? Now, we look at its October low, everybody made October lows. We look at the October low here on our daily chart of the Qs. It fell down to its lows here, and at the 200-day moving average, and that was at $342. And from there, after it hit this low here, then interest rates started lowering, going lower, and so buyers came in, and as I say, the shorts came in, and it rallied from there. It climbed over the 20-day and the 50-day, which had become inverted moving averages, and over the October highs. It climbed over that at 373, so it climbed over that price resistance. Then it climbed over the September resistance back here at 380, so we had this beautiful uptrend here, and then over the July highs, and then it started consolidating in this range right here between 383 and 394. It had to catch its breath, but stocks or ETFs, they have to slow down. They can't go up straight up. They have to, like we do when we're climbing a staircase. We have to slow down once in a while and take a breath, and stocks do too. Now, if they do one of two things. They move down or they move sideways, because stocks can only go three ways, up, down, and sideways. So we had this consolidation period here that was bullish because it didn't pull back. The buyers held it up, the bears pushed it down, but the buyers could hold it up. So it went sideways again, then rallied in our last rally, which was really beautiful again, up here to the closing price today at $409.54. Now the RSI down here, the 14-day RSI, is still overbought here for sure. It's softening a bit. The Qs have potential support at 402 and 403 right along here, and the 20-day moving average at $400, and then along the consolidation back here at 383 to 394. So this bull uptrend is wonderful. It's enthusiastic, but it's steep, and I recommend we keep our stops in place as usual. Okay, we're going to look at an ETF we've looked at before. Again, as it has been for the last couple of weeks, it's been hard to find anything that isn't extremely overbought in the technology area. All this is kind of technology. So we're looking here at the genomics and biotech ETF, the Global X Genomics and Biotechnology ETF, the GNOM. I'm going to call it Gnom to make it easy. It has 41 holdings, including CRISPR Therapeutics, 10X Genomics, Natera, Pacific Bioscience, and Agilent Technologies. Now I'm looking at this ETF because if the stock market pauses in the next week or so, and I wouldn't doubt it, typically biotechs don't pay that much attention, and this one's got a pretty nice chart. And with AI coming along, these biotech charts, stocks, companies are getting more attention. Now, so we're looking at this chart. We know that it made this high way back here at around 13 or so, came down, had its October low along with everyone else, about $8.60, moved up through its moving averages in a nice uptrend here, walked up its 20-day moving average again to its closing price today at $11.56. Now it has managed to move up and over certainly its 50-day moving average, its 20-day, but the 200-day moving average is inverse because it has only been doing this since October, and it's just made it up this high. So again, I'm doing this because biotechs don't usually follow the market. A lot of times they'll follow the NASDAQ a bit, but they won't follow the whole market many times. And this looks like it may be getting a decent start here. When I captured this chart today, again, when the market closed, the Gnome was trading $11.56. Now, I will tell you, you can't see it on this chart. It made an all-time high in February of 2021 at $28.45. So we've got room. In the coming week, if the Gnome stays above $11, I'm not going to give it much room here. I will add a small position to my trading portfolio with a stop down here at $10.80, and that is below the 200-day, below the 20-day, but I have to give it some room here. If and when it climbs above $12 and stays above it for 3 consecutive closes, I will add to my position and trail my stop by then. So you may want to keep an eye on the GNOM in the coming week. Now, if you'd like to become a more successful trader in the new year, this is a great time to check out all of my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. You could learn how to swing trade right here, how to swing trade successfully, how to trade the trend to profits, one of my favorites, how to read charts, great for novices and even those who are a little more adept, 3 winning setups, great for short-term traders, and one of my favorites always, how to bottom fish like a pro. These programs are timeless, and they will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen right here, or easier still, just click on the orange button below. Again, I wish all of you and each of you a bright and prosperous 2024. Until next week, I'm Toni Turner, and this is The Market Now.